Since Boeing New York Stock Exchange symbol BA Brian Adam is in the news a lot lately, and for no good reasons at all. All the reasons that Boeing is in the news lately are all bad for a long time now, for months. Let's talk about Boeing and what's going on there. There's some good articles that have been coming out, some crazy current event stories, and I even spoke with a podcast listener who was in the military for a long time, and it sounds like that Boeing will eventually need some type of bailout. Let me turn off the phone here. For some reason the text messages keep blowing up. So, lots of problems with Boeing. Boeing's balance sheet is an absolute mess. This is from Kubiko, who's on Twitter. He's a very popular fundamental analyst. He's in the Tesla Q community and elsewhere. But he posted the balance sheet of Boeing at the end of Q3 2019 because the companies have not reported Q4 yet. I don't think Boeing has reported Q4. But the balance sheet officially for Boeing is very, very dicey. Their market cap is around $175 billion as of doing this podcast. And their balance sheet has only $9.763 billion in cash, 73 billion in inventories, which they cannot sell. A lot of those inventories are the 737 MAX plane, which the regulators are claiming today. The FAA and some of the other regulators here in the US are claiming that Boeing will not be allowed to sell it until June or July. But I've spoken to other people, and other people have posted that there's no demand to buy the planes right now, even if the regulators approve it, that people still don't want to buy the planes. So Boeing is sitting on a massive amount of inventory that they might not be able to sell because of all the software problems and all the other problems with the plane. Their accounts payable is enormous, $15 billion. $15 billion accounts payable, accrued liabilities of $19 billion, advances and progress billings, $53 billion. And they have an enormous amount of accrued pension fund liabilities, net of $14 billion, long-term debt over $20 billion. And this is one of the few companies, this is very, very rare, for a market cap well over $100 billion. You almost never see this. Boeing, especially with the share price, is still at $300 per share. Boeing has total negative shareholders' equity of minus $4 billion. So assets minus liabilities, and Boeing has, at the current levels, negative shareholder equity of over $4 billion. No wonder that Boeing is so desperate to borrow, $10 billion from Citibank? Emergency borrowing. They want to add even more debt to the balance sheet. So Boeing's level of financial engineering, of corporate malfeasance, it exemplifies the problems that are wrong with corporate America, that are wrong with the US. Lots and lots of problems from a company that was once one of the best manufacturers in the whole country. I can't say that anymore. Boeing is better at financial engineering. They've been better at financial engineering for a long time. They cut so many corners on the 737 MAX. They outsourced the computer software programming. They chose profits over people. They, ignored the safety warnings. They refused to pay competent computer programmers a good salary, $100,000 to design the code to fix it. This is a total disaster of a company right now. Absolutely horrible. Wolf Richter has an article on this that you can see on your screen. After blowing $43 billion on share buybacks in only 6 years, Boeing scrambles to borrow another $10 billion on top of a $9.5 billion credit line in October to fund its 737 MAX fiasco. The first thing to know about Boeing's mad scramble to line up $10 billion or more in new funding via loan from a consortium of banks on top of the $9.5 billion credit line it obtained in October last year, efforts to somehow get through its cash flow nightmare caused by the 737 MAX fiasco, is that the company blew, wasted, and incinerated. I love his choice of words here. $43.4 billion to buy back its own shares since June of 2013, having become a master of financial engineering instead of aircraft engineering. Also, excellent wordplay there. If Boeing had focused on its business, such as designing a new plane instead of doctoring an ancient design to save money and time, if it hadn't also outsourcing the computer programming code to below minimum wage levels to computer programmers in India instead of paying people, high quality employees, a good wage, and if it hadn't blown $43 billion on share buybacks, but had invested this money in a new design, those two crashes wouldn't have occurred, and it wouldn't have to beg for cash now. The chart below shows the cumulative share buybacks in billions of dollars since the first quarter of 2009. In Q2 2019, it belatedly halted the share buybacks. As is always the case with share buybacks, the idea is to buy high in order to drive shares even higher, so it's a scam. It's a scam by corporate America, by the CEO and the senior executives to get rich quick. They load the balance sheet with debt, like General Electric or GE. And in a lot of ways now, what GE Capital, well, GE Capital was one of the worst offenders, but Government Motors. So Government Motors went bankrupt, the shareholders got wiped. It's going to be interesting to see what type of bailout. First of all, if Boeing needs a bailout, and it's looking like they will. But my podcast listener who worked in the military a long time said that Boeing is going to be a national security issue. So they will probably be bailed out, but it'll be interesting to see what happens. But there's a lot of the same mistakes that are coming out of Boeing that we're seeing now with the balance sheet and the share buybacks and others that are very, very similar to General Motors or Government Motors right before Government Motors went bankrupt, and the bondholders, the creditors, got screwed. The senior secured bondholders, there was an Indiana pension fund that was supposed to be at the top of in the front of the line, and they got screwed over by President Obama and his cronies, and the United Auto Workers got a bunch of shares, equity, in the new Government Motors instead of the Indiana State Pension Fund bondholders that were supposed to get a lot of the shares. So Boeing resembles a lot of the mistakes that were done with General Electric and Government Motors before they went bankrupt. It's looking very, very bad for Boeing. I'm really, frankly, very surprised that the shares of Boeing are only down about 30% since they got to $440. That is nuts. $440 per share on February 25th of 2019, $440.62 per share. So the shares are only down about 30% from those levels. It sounds like a lot, and it is a bear market, but if you were to go back and look at a chart of Boeing since Trump won the Republican nomination and he started to gain in the polls, leading up to the 2016 election, the chart of Boeing went parabolic. And I was paid to do research work for a high net worth client, and I remember this was like a year and a half ago. It was over a year ago. Actually, it was a little under a year and a half ago. And I remember that Boeing was on my recommendation list it was on my research list for stocks. It wasn't financial advice. It was just a research reports that I was writing. And Boeing, I was looking at the balance sheet and the financial statements of Boeing, and they weren't improving. And the stock was still going up anyway. And I was like, what the hell just happened? The stock has tripled, and the fundamentals are getting worse. I was like, what the hell is going on with this company? But everyone was under the impression that President Trump was increasing the military budget. This was going to benefit Boeing and Lockheed Martin and the other defense contractors and military industrial complex companies. And to a large extent, Trump did do that. But the management team at Boeing kept on cutting corners, kept on doing even more financial engineering. And now Boeing is in a very, very big mess. And the stock should actually be down a lot more, in my opinion, than 30%. Now, I have a lot of friends who are short this stock. For full disclosure, I'm not short the stock, but I have a lot of friends who have been buying puts on this for a while, so they made a lot of money, and they think this thing's going a lot lower than what it already is. This thing could end up, needing a bailout at some point. I don't know the timing on this, but they definitely have a liquidity crunch if they're looking to borrow more and they don't have that much cash. Justin says there's no way he'd fly in a 737 MAX. Yeah, I don't think I would either. They're going to have to rebrand that sucker. They're in some big, big problems. Maybe Trump and the Pentagon will come up with a new type of purchase order or bailout. They might get creative. It's tough to know what type of bailout they'll do. We'll have to see. There's a bunch of different types of bailouts that they could do, but things are not looking good for this company. The stock, though, when Trump started, let me just give you a perspective here in the stock. If you go back and look on February 8th, 2016, for the stock chart of Boeing, it is crazy. The stock goes absolutely parabolic. It's even worse than Apple, how parabolic it went. It went up fourfold at one point. So from February 8th, 2016 to February 25th, 2019, so barely 3 years, it went up over fourfold. Now, it's been coming down since then. And by the way, when it went up fourfold in about 3 years, the fundamentals didn't improve at all. It was financial engineering and the assumption by market participants that Trump was going to give them more contracts. Okay, let me go back to the Wolf Richter article. As is always the case with share buybacks, the idea to buy high in order to drive shares even higher. Again, this is a scheme. There's a real problem. It's not just Boeing, with corporate governance in this country. The pay structure, the incentive structure for CEOs and senior executives is not aligned with the long-term interest of shareholders. It is aligned with the short-term interest of shareholders to maximize earnings per share with financial engineering and goose the stock price higher. But these companies are not creating durable competitive advantages with new products and services at high margins. They're not building out their moats, as in the past Warren Buffett would have called it. I don't even think Warren Buffett believes in that stuff anymore at this point, with Warren Buffett's investing strategies and his corruption and cronyism, and how normally after Warren Buffett buys a company, a large company, now shares of a large company, within 2 or 3 years now there's an accounting fraud scandal. This is what you learn on the first day of Financial Engineering 101. So back to the article. This is what you learn on the first day of Financial Engineering 101 with the share buybacks with debt to move the stock price even higher. The Apple also did the same thing recently. Apple did it starting in May of 2019. Apple share prices were in trouble. I have a whole slide deck on Apple and the NASDAQ. I've been doing so many other projects. I should probably get that done. But Apple increased dividends by, I think, 5%, and they juiced share buybacks by another $75 billion. And Apple was in a lot of trouble fundamentally. There was a lot of declining sales globally for Apple in India. I believe in India, and China was the big one, where Apple had declining sales in May of 2019, and then the CEO of Apple went to massive financial engineering, and the stock went crazy up after that. Boeing stopped buying back its shares in the first quarter of 2009 when its shares had plunged into the $35 range, at which point they were a good deal, and then recommended share buybacks in the second quarter of 2013 when its shares had already risen to the $100 range. The second thing to know about Boeing's mad scramble to borrow another $10 billion is that it already has a huge amount of debt and other liabilities, and that its total liabilities, $136 billion, exceed its total assets of only $132 billion by about $4 billion as of September 2019, meaning that it has negative net equity. Again, this is extremely rare to have negative net equity for a large cap company, and the share price is not below around $10. Extremely rare. And in the past, decades ago, when I would say the US had more morals and there was more ethics, that if a company had these types of scandals, especially with one of their main products, where people were dying and they didn't do a good job and they cut corners, and all these details were coming out, like what's coming out about all the corners that were cut with the emails from the Boeing executives and upper and middle management about all the corners that were cut with the 737 MAX, and laughing at the regulators that are being found out in like Discovery and other parts and other investigations. But a scandal like this a couple decades ago, the company would have been bankrupt very quickly. I mean, to sully or ruin your good name or reputation, especially a quality product that had, at one point, Boeing had one of the best reputations of any manufacturers in the country, in the world, let alone the country. And at this point, they've gone all in on obfuscation. So we're looking, I think it's a question of if and not when another type of it's tough to say how the bailout will be, though. It's really tough to say what type of bailout. There's a lot of different ways this could go. This could be similar to the government motors bailout where the shareholders get wiped, or it could be where Trump or the Pentagon come up with a new government contract that Boeing makes a killing on, and then the shareholders don't get wiped. It's really tough to say. Sonny says Boeing lied, people died. Yes, and corners were cut, and they outsourced a lot of computer programming to low wage computer programmers that they should not have done. There was a bunch of problems with it. But this goes back to profits over people. If they had paid good computer programmers $100,000 or more to design the computer programming software, I don't think they would have had the problems. Profits over people safety. Meanwhile, the stock really isn't down that much relative to all the news releases and the press releases and all the problems. The stock really it's only down 30%. I mean, it could be in the past it would have been way worse. If this was decades ago, the stock would have been down 60, 70%. There'd be people talking about bankruptcy already. Instead, it's like, if you look at all the news headlines that are coming out from the mainstream media, it's like, oh, no big deal. Boeing's going to start selling the 737 Maxes in June or July. No big deal. I have a couple of those headlines open. Oh, they expect approval from regulators for 737 Max in June or July. Temporary halted. No big deal. Blah, blah, blah. Sasha, I didn't see that new contract, but the balance sheet for Boeing is really, really bad. It's gross mismanagement how bad their balance sheet is. The stock price has not reflected the company's fundamentals for a very long time, for a couple years now for Boeing. There's been an enormous disconnect. Let me look at their market cap, their exact market cap. Their market cap is still $176.362 billion. Let me see what their dividend payout ratio is, if I can look that up pretty quick. Yeah, normally with balance sheet problems this bad, dividend cuts are coming too. Normally, might not necessarily be the case if they get the right bailout or get the right military government contract, but normally when things look this bad on the balance sheet and they're begging bankers for another $10 billion in credit line, or actually there's been 2 credit lines increasing now because they had one in October. Okay, so back to the Wolf Richter article also means that every dime in cash and cash equivalent listed on the balance sheet is borrowed. Wow. So not only do they have negative net equity, it also means that every dime in cash and cash equivalent listed on their balance sheet is borrowed. This is about to get a whole lot worse. In October 2019, Boeing had already obtained a new credit line of $9.5 billion, which about doubled the size of their existing credit line. Credit lines serve as liquidity backup. And now Boeing is scrambling to pile another $10 billion or more in new loans on top of it. This huge amount of cash is needed to fund the cash drain resulting from the fallout of 2 737 MAX crashes, the global grounding of the planes now in its 11th month, the inability to deliver the 400 or so already built planes. Hence, that's why you have over $73 billion in inventories that are just sitting there, probably in airplane hangars. The current halt in production, the squealing suppliers that have now started layoffs, the settlements with its airline customers over the grounded planes, the settlements and litigation with the families of the victims of the 2 crashes, the costs of dealing with global regulatory issues, the collapsing, wow, there's a long paragraph of all the problems Boeing has lately, the collapsing sales of that plane, the scandal of Boeing's culture revealed by corporate emails oozing to the surface, and the cost of re-engineering the software of the plane to make the plane safe to fly, amid doubts that this can even be done. Putting a priority on financial engineering over actual engineering can get very expensive. Now Boeing is getting closer to a deal with a group of banks led by Citibank for new loans of, quote, $10 billion or more, end quote. CNBC reported this was yesterday. The article came out, Wolf Richter's article came out, citing people familiar with the matter. The banks have already agreed to $6 billion of the funding so far, and Boeing is talking to other lenders to obtain more. Commitments are due by the end of this week. The loans will have a maturity of 2 years and will have a delayed draw structure that would allow Boeing to access the funds at a later time, Bloomberg reported yesterday, on January 20th. On January 13th, Moody's finally started stirring in bed after sleeping through the first 10 months of all this and announced that it would put Boeing's debt ratings on review for downgrade. Wow, they still haven't downgraded Boeing, despite their balance sheet, fearing a more costly and protracted recovery for Boeing to restore confidence with its various markets constituents and an ensuing period of heightened operational and financial risk. And the upheaval among Boeing's largest customers is growing. Speaking today at the airline, so this was yesterday, the article came out yesterday, at the Airline Economics Aviation Finance Conference in Dublin, Stephen Udvar-Hazy, executive chairman of aircraft leasing company Air Lease, which has 150 of these cursed 737 MAX planes on order, said, according to Reuters, that his company, quote, asked Boeing to get rid of that word MAX. I think that word MAX should go down on the history books as a bad name for an aircraft. Quote, the MAX brand is damaged, he said. Boeing brand is damaged more than just the plane. Their brand integrity is in a lot of drama. Their brand integrity has been destroyed. Let's just say their brand integrity has been destroyed. It's going to take them a long time to repair this nonsense. At the same conference, Angus, okay, that's a way different name to spell Angus Kelly, CEO of aircraft leasing company AerCap, which has 100 Boeing 737 MAX planes on order, exhorted owners of these planes to not panic dump them by leasing them at low rates or sell them cheaply, according to Reuters. Quote, discipline and keeping a cool head is vital because if people panic and lease the airplane or sell the airplane at knockdown rates for an extended period of time, it will be harder for the residual value of that asset to recover. A plunging residual value could be deadly for aircraft lessors, and he exhorted his colleagues to be absolutely disciplined when it comes to placing the aircraft. Okay, this was updated today. Boeing stock was halted at around 2:12 p.m. pending news after stock had dropped $15 or 5.5% to $306 per share. Now the news is out. Boeing announced that it still doesn't know when the 737 MAX will be ungrounded, but it has moved the earliest date out to mid-2020. And the mainstream media is spinning this to that June or July of 2020 is guaranteed. Longshot asks what percentage of GDP is Boeing to suppliers. I heard it is significant, and that is going to affect the ISM numbers, the U.S. manufacturing ISM numbers. So it's not looking good for Boeing. I can't give you a timeline. I can give you an educated guess, maybe. If the bankers are going to keep giving Boeing credit, this can play out a little longer than you think. It depends how much credit the bankers are willing to extend them. There's a big balance sheet problems here. It is very, very rare for a company with a $176 billion market cap to have $4 billion in negative shareholder equity. That is gross mismanagement. That is criminal mismanagement of the balance sheet. People need to go to prison. They won't, but they should. The CFOs should go to prison. The CEOs should definitely be. Well, he should be in prison he should be criminally charged for knowingly cutting corners like that, for letting people die. It shouldn't just be lawsuits and wrongful death lawsuits. But until the U.S. government actually follows the rule of law and puts corporate CEOs who knowingly cut corners, knowing that people would die. So there's more than just wrongful death lawsuits that are settled for pennies on the dollar. Because when the average person goes up against a corporate lawyer, they're screwed. Even in a wrongful death, it has to be a class action. Charles says if Boeing goes under, it is 3 million jobs on the line. Charles, most likely Boeing will get a bailout of some kind. I can't tell you what type. They are a national security issue, which means that they are way more likely than other corporations to get a bailout. I can't find the right tab to look up the dividend payout ratio. Let me keep looking, see if I can find it in here. See your profile. Is it there? Nope, not there. Here we go, statistics. Oh, its dividend payout ratio is 120.05%. That's not a good dividend payout ratio. That's according to Yahoo Finance, so that might not be exactly updated, but they're normally fairly reasonable with the large cap companies, especially the well-known large caps. So according to, I think they normally plug in now the data from the S&P IQ one, the data service. Let me see if it says that. Normally they pull the data from there. Yahoo Finance used to pull the data from S&P IQ, which is not a Bloomberg terminal, but it's like the cheaper version that's a good deal. So dividend payout ratio is high. What a mess. IBJI says Boeing got rid of all the engineers that were on the board, so no one was there to challenge all their bad decisions. Lots of people are getting bailouts, not just hedge funds. Daniel DiMartino Booth said pensions are toast. Sounds like Boeing pensions are toast. General Electric also has pension problems. Verizon and AT&T have looming pension problems. That's why Verizon and AT&T keep jacking prices up. Well, one of the reasons. Also, their debt levels. When you have that much debt and you have pension fund liabilities, prices are going to go up. Kevin says, thanks for the videos, Jason. You're welcome, Kevin. Yami Mata says, fun fact, Trump imposed tariffs on Airbus because the European Union subsidized part of its research and development. And Boeing gets Lockheed Martin, Boeing, Raytheon get a ton of U.S. federal government contracts. If a large corporation, a defense company, or an aircraft company gets a large government contract, isn't that very similar to the government subsidizing research and development? I mean, they're still getting government money. You're arguing semantics, and you're saying, oh, they got the money for research and development, but we gave them a large government contract. Sounds similar to me. So congrats to my friends who listen to this podcast who were already shorting Boeing. It's not looking good for them. But then again, with the mainstream media, they're spinning everything. Everything's like, oh, it's only 6 more months until Boeing gets the planes approved. Oh, I wanted to talk about one more thing, military-industrial complex and bailouts. So Jim Rogers, legendary investor, he made an unbelievably good contrarian call on defense stocks, I think in the 70s. So let me read this story. This story came out. Jim Rogers has talked about this briefly in a lot of interviews for years now, in podcasts, on TV, video. But someone wrote up an article about it. It took me a while to find this, actually, to search out the story and find it for you guys about defense stocks and bailouts with the military-industrial complex. So what makes Jim Rogers such a great investor? When Jim Rogers was in his early 30s, he was invited, this is from a Morningstar article on, looks like December 17th, 2018. He was invited to dine in a fancy Manhattan restaurant with a bunch of successful investment managers, since those were the early years of Quantum Fund, a hedge fund Jim Rogers co-founded and co-managed by him and George Soros. It was a big deal to hobnob with these fellow investment wizards. In the throes of male bonding, the host asked each guest to recommend a stock. The names of various growth stocks were confidently spewed till Rogers, so this was the 70s, till Rogers named Lockheed Martin Corporation. The company later merged, it was just Lockheed back then, Lockheed Corporation. The company later merged with Martin Marietta to become Lockheed Martin. The polite ones raised their eyebrows at this plebe. Bruce Waterfall, one of the few at that time to run a hedge fund, smirked and stage whispered, "Who buys stocks like this?" Rogers was understandably embarrassed. It was his first dinner with this group of elite investors who got together once a month, and his pick was scorned. Not for long, though. Lockheed appreciated 4,000% from 1973 to 1983 because the military industry got bailed out and there was war contracts. So the defense industry was on the ropes in the 1970s, and they were all close to going bankrupt, and they got enormous bailouts. And Rogers made a killing on it. Way back in October 1973, the Yom Kippur War took place when a coalition of Arab states led by Egypt and Syria launched a surprise attack on Israel. Yom Kippur is the holiest day in Judaism and is a national holiday. Naturally, Israel was caught on the back foot. Moreover, the war was a shock for the technologically superior Israeli forces. The Soviet-supplied missiles used by the enemy took a heavy toll, particularly the SA-6. The latter was a self-propelled low-to-medium altitude surface-to-air missile known as SAM. According to experts, it would fly out parallel to the desert floor, then very accurately pitch up at the target without leaving a smoke trail. It is widely acknowledged that the Israelis suffered heavy losses of aircraft during this war, though the exact number lost to specific SAMs is not clearly documented. Rogers' investment style was not to get preoccupied with what a particular company is going to earn the next few quarters. He would set his sights on how a broad social, economic, and political factor would alter the path of an industry. So when it became news that Israel was on the defensive and that some of its military technology was antiquated, a thought struck him. Israel's prime supplier of weapons was the U.S. Did that mean that the American technology was antiquated as well? That was the case with the Pentagon not spend millions to ensure that its hardware was not obsolete, considering that the Soviet Union had superior technology. This thesis had held scant appeal to most because the Vietnam War was coming to an end, spending on defense was being curtailed, and defense firms were not on solid ground, with many looking like they were going to go bankrupt. They were considered pariahs by many stock analysts. Rogers was undeterred. He began to keep a special eye in the industry. He traveled to Washington to converse with Pentagon officials and defense contractors across America. The U.S. Defense Science Board conducted a study of the war and concluded that in any future conflict, American planes would have a real challenge getting through air defenses. The board recommended development of a new kind of bomber that would evade SA-6 by being essentially invisible to its supporting radar. By mid-1974, the boys at Quantum Fund began scooping up defense stocks, some of which were selling for only $1 or $2. So they had crashed so much, these defense stocks. They were pricing in bankruptcy. Most of them were down to only $1 or $2. The focus was on United Aircraft, now United Technologies, Northrop, and even Lockheed, despite being threatened with extinction. Though Lockheed was bleeding profusely, the firm was cutting off a huge money-losing division and was starting to focus on new technologies. More importantly, Rogers, after coming down to D.C., I'm not sure if the article is going to cover this, but he's talked about this in the past in his interviews, he knew the bailout money was coming. Soros, because he had come down to D.C. and spoken with lobbyists and spoken with a lot of people, and he was confident that there was going to be bailouts. Soros and Rogers knew that all these companies had major contracts that, when renewed, would provide fresh earnings over the years. They also noted that the modern battlefield was fundamentally changing. New arsenal. Okay, if you want to read the rest of this, there's another 6 or 7 paragraphs. But Rogers ended up making over 4,000% returns on this trade in less than 10 years. Oh, Boeing bought Embraer? I didn't even know that. Finance Freak says they may liquidate shorts for the greater good. You might be right. In this new normal, governments want to go after shorts. The mainstream media narrative, the mainstream financial media narrative, regular retail investors, they don't even know exactly what shorting is, unfortunately. So if you are a honest, ethical, smart short, and you find balance sheet fraud or some type of manipulation by the company, or the company's committing fraud or lying or something like that, They could just cancel out your trades. It says Boeing is getting a consortium of banks. It's not just Citibank. So according to these articles, I've read that Boeing went to a consortium of banks to get that extra $10 billion loan. It is a huge opportunity to buy Boeing at this price. With all this risk, I don't know about that. Risk and reward, I don't know. If you're betting on a bailout, maybe. That's a really bad balance sheet. If the share price had crashed down to $1 or $2, that's something I would think about. If you're just going to look at the company and the potential for betting on a bailout, I wouldn't buy it at $300 something a share. That's my opinion. We have no way. Charles asks, you think the stock market is in a melt up? How long do you think it will last? We have no way of knowing. How much can China, the European Central Bank, the Federal Reserve, Japan, how long can these central banks expand their balance sheets? How long will the majority of people not protest and just shrug their shoulders and say, I hate capitalism, but their stock portfolios are growing up? If they have stock portfolios in their retirement accounts. Mark asks a good question. Boeing is too big to fail. Do I think Boeing is too big to fail? Yes, I think Boeing is too big to fail. And I spoke with a podcast listener who has extensive experience, former military, and he said Boeing is a national security issue. So that means Boeing is strategic, and the government will, educated guess for now, step in at some point. Now shares for Boeing could drop. They could drop a lot more than just 30% in the last year. And then the bailout could come later. Yasser says that Boeing will increase dividends next quarter when despite their dividend payout ratio already being 120%. You're a contrarian, Yasser. You must know about the bailouts already. I live like 20 minutes from the Pentagon, and I don't know about the bailouts yet. And I have some military contacts. I even know some Pentagon auditors that I've had off-the-record conversations with. Okay, well, I think that's it for tonight with Boeing. I think I've pretty much beat that dead horse. Oh my God. It's so bad what these companies do, what these companies get away with. It's unbelievable. Look, if the U.S. federal government wanted to fix the rule of law, all they need to do is throw a couple of these scumbag senior executives and CEOs in prison. And the Boeing CEO, the former Boeing CEO, would be one of the best ones because all the corners he cut and the accounting fraud and the other stuff, people died. Real people died over this. He should be like the poster boy for why corporate CEOs should go to prison. It shouldn't just be wrongful death lawsuits that are settled for pennies on the dollar in a class action that are dragged out for years. But no one's going to prison, unfortunately. All it would take is a few CEOs to go to prison. And then, you know what? They would get the message. A few of them go to prison for 10 years. They don't even have to go to prison for the rest of their lives. A few of them go to prison for 10 years. And I think the bad behavior would stop. Or at least it would be cut in half pretty quickly. But until that happens, rule of law is basically dead. Meanwhile, the stock market's going to continue up at some point when Trump issues new press releases or the Federal Reserve's balance sheet expands again in the next couple weeks. Welcome to dystopia. Okay, thank you very much to my over 200 Patreon account contributors. I will be working, hopefully in the next couple days, on a new bonus podcast for Patreon account contributors that will be behind the paywall. And thank you very much to people. I'm now over 30,000 YouTube channel subscribers. I actually beat the Dow to 30,000. I am totally shocked. Special thanks to George Gammon. He helped me do that by mentioning my work in his video yesterday. That was great. A lot of hard work getting to 30,000 YouTube channel subscribers. It should have happened years ago, but it is what it is. Thankfully, though, my Patreon is still growing, and my monthly PayPal contributors are still growing. Jack Jean says, if they hate capitalism, they will not have stock portfolios. Actually, I disagree with you because there's lots of hypocrites nowadays. Lots of hypocrites nowadays. Lots of champagne socialists who love everything about capitalism, all the nice things, all the different choices. Stock portfolios, real estate, BMWs, Che t-shirts, Apple products, so they can tweet. They can get on their $2,000, $1,500 iPhone, get out of their expensive new BMW, tweet on their $1,500 brand new iPhone, and talk about how bad capitalism is. And a lot of them work in big tech. A lot of them out of Silicon Valley, making 6 or 7 figures, have those views. Wow, Jim Cramer just endorsed Boeing. Don't take your money out of Boeing, same as Bear Stearns. Welcome to dystopia. Okay, everyone, thank you very much for your time tonight, and there will be a lot more great content, because there's going to be a lot more crazy stories like this one, but the evidence is mounting, whether it's the balance sheet or the other problems that are coming out about Boeing, that Boeing is looking a lot more like GE Capital, and a lot more like General Motors, or as I like to call it, Government Motors. But Boeing is more strategically important than those other companies. Boeing is a national security issue. So we will see what the Trump administration, presumably if Trump has to deal with this before the 2020 election, or if he wins his second term, because he is very pro-military, very pro-industrial, military-industrial complex, very pro-Pentagon, especially government spending and the increases in the government budget. What they decide to do and what the Pentagon decides to do about this. Because at this point, things look so bad for Boeing that I can't give you a timeline on this, unfortunately, but there will be some type of bailout unless something drastic changes. But the balance sheet is not looking good. There has to be big improvements for Boeing to avoid with sales and cleaning up the debt and the other problems Boeing has to avoid a bailout. It's not looking good. Very, very rare to see a company with $176 billion market cap and $4 billion negative shareholder equity. That is, to me, is gross mismanagement by the CEO and the chief financial officer and the accounting department. Gross mismanagement of the balance sheet.